I did say that today I'm not going to be going too much into the conceptual framework anymore. I have been emphasizing it and reteaching it throughout the week. So now I'll make reference to it where necessary. But now we can actually start getting into the application of the asset. Okay, the application of the accounting elements or financial elements, right? Essentially, when you are writing semester tests, they are going to question you to apply the definitions, not only know them. So, knowing them and learning them is quite simple. I mean, it's theory, but you're going to have to apply it to a scenario, right? So, an example would be a vehicle was purchased by Focus Academy, right? The question would then ask you, they will say what element is present in the above scenario, and you would have to say this is an asset, right? And then while you're saying it's an asset, you'll have to write the definition of an asset. So you'll say an asset is a perk, right? You know how a perk is something good for you, if you understand. Like there's perks for having extra lessons, it makes you wiser. That would be a perk, right? Or a drug, basically perk the drug. It could be that one, whichever way you'd like to remember it, right? I hope none of you guys are perk poppers. Okay. An asset is a present economic resource controlled by the entity as a result of past events. So then you would say it is an asset because this vehicle is now a present economic resource controlled by the entity. You would have to state the entity that is taking control of this asset, right? As a result of past events, you will have to state what event led to this asset becoming what event led to the asset falling under the control of the reporting entity. Does that make sense? Okay, perfect. Right? Furthermore, you need to know what an economic resource is. Okay? An economic resource is a right that has the potential to produce economic benefits. The words that are highlighted in these slides are very important words, and I believe you should use them as keywords in order to understand these definitions. Okay, right? So, there's also a definition of what a right is, and I'll be presenting those slides shortly, right? But for now, just know that an economic resource is a right that has the potential to produce economic benefit. Potential is also a key word because it may not be probable, right? It may not be probable that the asset actually produces economic benefit. You never know what could happen. You could lose the vehicle, theft. It could um, uh, get some damage to it, right? So that's why they use the word potential. Okay, the economic resource in our minds when we are buying, if we buy an asset, the vehicle, if we are buying this vehicle to be a delivery vehicle, we are buying it for the potential that it can deliver our goods and services wherever we want them to be. It's the potential, but obviously it does not even have to be certain. It just has to be the potential that it can actually fulfill economic benefits. All right. We then get to a liability. A liability is a present obligation. Okay. An obligation is essentially something that you have to do. You do not have choice. Most times, an obligation is formidable by law. Like the law ensures that you fulfill your obligations. Okay? So it's something you have to do by law. If I go to a barber, right? And let's say, for instance, I give him 300 Rand. he is now obliged to cut my hair legally because it is a obligation, right? I've given him money. I need a service done. Okay. So in that sense, if I paid him before he actually cut my hair, it would be a liability to him, right? Because he has to fulfill the service. All right. But then if he cut my hair first, it would be a liability to me to ensure that when he is done cutting my hair, I pay him. Okay. So a liability is a present obligation of the entity to transfer an economic resource as a result of past events. As I've said, if I pay the barber before he cuts my hair, right? His entity has to transfer an economic resource to me because the past event, as a result of past events, the past event would be me paying him before my hair is actually cut. Please thumbs up if that makes sense. If it doesn't, thumbs down. I would like to see how it's going. Okay. Yeah, majority. Majority is thumbs up. Okay, I see only one thumbs down. May you please type in the chat box so that I can continue? And then I will go back to the chat box and see why you don't understand. But the rest of the class understands, so I'm going to continue. Okay? Then we move on to equity, right? Equity is another important financial element. Okay? Entity is another important financial element amongst assets and liabilities, right? And just a recap, these elements are found in your statement of financial position. Okay. All right, just give me a second, guys. Okay. So equity is the residual interest, once again, highlighted word. So please assume that it is extremely important that you understand what the word means or how important it is to the definition. Okay? Equity is the residual interest in the assets of an entity after deducting all of its liabilities. All right? So, what does residual interest? Yes, I'm getting into that. Right? I'm getting into that. So, how I would like you guys to remember this is essentially equity would be the money you have left over after you have accounted for expenses in an entity and the liabilities. Okay? So you would then say all the assets we have, our money, our machines, land and buildings, all of that, that whole value, right? Minus the liabilities we have to pay. So if we're paying rent, if we owe a lease for leasing a truck or a machine, all right? Any money that we owe, we need to subtract it from the money we actually have in our entity or the value, right? The value of our assets. We need to subtract the money we owe in order for us to have the residual interest. That would be money that's actually ours, money that we can actually use and make more of without having to pay anyone a cut or a fee. So for you, it would be if you owed money, let's say you owe, okay, let's say assume Pick and Pay. Assume Pick and Pay lets you buy your goods and services on credit. Okay, so you go to Pick and Pay. Is this the same as retained income? No, no, guys. I want to announce something, right? For those who did accounting in high school, you're going to need to learn to let go, right, of most of the terminology not the standard. Yes, we apply everything the same, but the terminology is completely different. Okay? So you need to, if I tell you equity is the residual interest, do not assume that it's the same as something else from high school accounting, because it will not help you at all in your papers if you write retained income, right? You have to follow the new standard that is being presented to you through the conceptual framework. Okay? So that's why I say those who did not do accounting in high school, you are not in too much trouble, because both you and an accounting student from high school are learning something new. Okay? You can make reference to the old principles if you'd like, but when you are writing semester tests and exams, do not, and I repeat, do not present any of the content or applications from high school. They will not be mercy marks. They will not say, oh, at least they're trying. No, right? So you need to ensure that you follow the new principles that you're being given, both in these classes and at UJ. Is everyone understood with that point? Because yesterday's class was a bit of a mess because we started to mix high school accounting and UJ accounting, right? So just please come here with an open mind. Come here as if you've never learned accounting before, because we are teaching you a new way of accounting. Okay, lovely. So as I was saying, assume Pick and Pay allows you to buy your groceries on credit. Okay? And you go to Pick and Pay, you pick up your groceries, you go home. You have them in your kitchen, but you have not yet paid Pick and Pay. All right? And let's say your bank balance is 1,000 rand. Now you are not paying Pick and Pay because you want to save your money for other things, right? But equity states that the asset that you have is the 1,000 rand in your account. That is an asset. Okay? You have 1,000 rand. You owe Pick and Pay 500 rand, right? For the groceries they gave you on credit, keyword credit, right? But for the fact that your bank account is 1,000 rand, that 1,000 rand is yours. That is your asset. For me now to calculate your equity, I need to deduct any money that you owe. Okay? So now I ask you, do you owe any money? You're going to tell me, yes, sir, I do owe money. Okay? I owe Pick and Pay because I bought groceries from them on credit. They gave me the groceries. I've even started eating some of them, but I am yet to pay them. I have not yet paid them back. Okay? Then me as an accountant, your accountant, I will say, okay, then your assets are 1,000 rand, your liabilities are 500 rand, because the liability in question is the fact that you owe Pick and Pay 500 rand. That is why your liabilities would be 500 rand. And then what would your equity be then? I would then tell you, if you want to know your equity, deduct, right? Deduct your liabilities from your assets and you'll get your equity. And if you guys do the mathematics correct, your equity would be 500 rand. Does that make sense to you guys? Let me just give you a second. If there's any questions, let me see the thumbs up. What's going on? I'm just going to let you guys give me feedback. Okay, majority is understanding. All right, that is lovely. Perfect, perfect, perfect. Okay, 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 okay. Right. Um, so that is your equity. We now go to income and expenses. So for the income and expenses definition, guys, there usually is no application question for them. but they can ask you to write the definition in full. And with this one, I'm going to try my best by all means to keep the explanation simplified, right? Because it is a mouthful and you could get very confused because of how similar these definitions are. So I have color coded the important words, and I just want to give you guys 2 minutes or even a minute. I'm going to mute my mic for a minute, right? So that you guys can read these definitions and interpret them from your own perspective first. And then I will come in and create my own explanation or give you my own explanation. Is that okay, guys? Okay, cool. 1 minute. Okay, guys. So, by a show of thumbs up or any reaction, just from reading it alone without having it being explained, are you guys understanding the definition? And can you see how you could get confused if you do not read and revise your concepts carefully? Okay, great. Even though only 6 people are answering, the rest of you guys, do you understand what you have read? All right. Okay, I'm seeing a few thumbs down. Some people don't understand. No problem. Okay. Okay, thank you. So, income and expenses, right? Income, just by reading, income is your increases in assets, right? Or the keyword is also or. I'm going to highlight that it's or a decrease in liability that results in an increase in equity. So keep equity in your mind when you are learning about the income and expenses definition. Okay, you need to keep equity close to your mind, right? Essentially, what we are being told is that for us to have income, we need either our assets to increase, right? And or our liabilities to decrease. For us to truly know that we have an income, we need to see that our equity has increased. Okay, so using the Pick and Pay example with you guys once again, right? The asset is your bank balance. Ne? That 1,000 Rand is your bank balance. It is your asset. The 500 Rand that you owe Pick and Pay for the groceries that you purchased on credit, your liability is 500 Rand. And then your equity is your assets. I've even written it here. If you read carefully, if you want a quick way to know what your equity is, it's your assets minus your liabilities. All right? It's even a reversal of the accounting equation, because if you look carefully, I just need to remember which side I put it. This is the accounting equation. Accounting equation is assets equal owner's equity plus liabilities, right? Please don't get confused because I wrote it in a different way. In the UJ slides, I'm assuming they're going to write it as assets equals liabilities plus equity, which is the exact same thing. Okay? This is your accounting equation. So now, if I want to know what my owner's equity is, right? I'll just do reverse mathematics. I'll put owner's equity on the other side of the equal sign, okay? And then when I put assets on this side of the equal sign, liabilities need to be subtracted from the assets, all right? The assets is the bigger number. In this case, our assets were, let me do this. Our assets were 1,000 Rand because of the bank balance, right? Our owner's equity is 500 Rand because that is the amount of money we can actually use and there are no obligations to it. It is fully yours. The other 500, you can use it if you would like, but you must know that you will remain in debt to Pick and Pay. Do you understand? So when you have it as an asset, the wise thing to do is to say, I actually need to pay my liability off. So this 500, I'll keep it in my bank account so that it stays as my asset just in case, because I'm a student. Any emergencies could come up. So I'm going to keep this 500 just in case of emergency. But when the time is right, I will then pay my liability, which is the 500 Rand groceries. Are you with me, everyone? Because I'm about to expand on this idea. Are you with me? Okay. So in this case, our equity would have been 500. Sorry. And then our liabilities would have been 500. Okay. So there we go. Using the example I created and actual figures, your accounting equation is complete. And one thing, guys, please, 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 you need to understand your individual asset items, individual liability items, individual equity items, because you actually could, there is a high probability that you will have to apply the accounting equation when they give you separate scenarios. So they'll give you a scenario, you will have to write under, I'll show you an example, but for now, let's keep it here. Just ensure that your accounting equation, if you look on the double entry system slides that I sent you, the chapter 4, you start expanding into general ledgers and recording. It's along those lines. We will see it though. In a nutshell, your accounting equation is important. Okay? So now that I've made you realize what your equity is, I was saying to you that for us to truly know that there was an income, our equity needs to increase. Okay? Now, how do we know our equity increased? With the above example, each time I scroll up, guys, just take a peep at the sides in which certain elements increase and decrease. Okay? I have recorded the blue ones as an increase and a red one as a decrease. I will go through this, but as I pass it, just keep taking screenshots with your eyes, okay? Because it is important. Right, as I was saying, how will I know that what is residual interest? Residual interest is equity, sir. That is the idea I am building on. Your residual interest is your equity. Okay? Your residual interest is the money that is left over after you deduct your liabilities from your assets. So in this case, our residual interest here will be 500 Rand because we have subtracted 500 Rand worth of liabilities from 1,000 Rand worth of assets to give us residual interest of 500 Rand. Okay? Is that fine, sir? I hope that's okay. There's a hand raised, Sikelela. You may unmute yourself and ask your question. If you don't have a question, you can just lower your hand. Okay, lovely. So now, for us to know that for us to know that there is actually income occurring here, let's say you have now been paid because, I don't know, you babysitting or you're cutting hair. Okay, I'm having an issue here with texting. Okay, so let's say you're a barber in your free time, or maybe you're a babysitter, and we add 250 Rand to your bank account. That is what is known as interest. Why? Firstly, it is an increase in assets. And what does our definition say? An income is increases in assets or decreases in liabilities, right? So in this case, it is an increase in your assets because 250 Rand came into your bank account. And bank is the most common asset. You should know that. That's the most simplified element you should be able to identify. Bank. Okay? Right? As we go further in the definition, that results in an increase in equity. Okay? So, for there to be income, there has to be an increase in assets, but that increase in assets needs to result in an increase in equity. Okay? So now our equity is also going to increase by 250 because, right? Because there is no attachment to that 250. We know we owe 500 Rand, right? We know we owe 500 Rand. Okay, so we've already put that aside in our liabilities. Our owner's equity would now be 750 because that is how much unfiltered value. Remember, it may not always be cash. For now, it's cash because I'm using a student's bank account. But for an entity, right, it's the value of the assets they have too. That is also included in the accounting equation. So don't just think of it as money. It could also be an increase in us. Let's say we purchase easiest one, delivery vehicle worth 120,000 Rand, right? Our equity should increase by 120,000 Rand because our assets have increased for that value. Okay? And to make it balance, if we bought this item on credit, we would need to ensure we record what portion of the liabilities are going to be paid off in the current financial year, as well as projecting the portion of the liabilities that we owe further in the future. Okay. And those are then also grouped into different types of liabilities. We have current liabilities and current assets. What are those? A current liability or a current asset is essentially, for an asset, it would be an asset that we're going to have for less than 12 months. Okay? That is a current asset, right? A non current asset, please remember these words because I'm going to show them to you when I show you the statement of financial position. Okay? A non current asset is an asset that is expected to be within the entity for more than 12 months. Okay? 12 months or more for it to be non current. All right? Same with a liability. A current liability is a liability that needs to be paid off within 12 months, within a year. Okay? A non current liability is a liability that needs to be paid off in longer than 12 months. Has everything I've said up to this point made sense, including how the income definition needs to affect both equity and assets? Okay, guys. Everyone, I need more thumbs up. I think I've seen about 10 now. What about everyone else? There's like 50 of us. Are you guys understanding? If you're not understanding, chat box is available. Let me see. Yes, someone said, I also saw somewhere where they say equity is the shareholder's interest. That is correct. Okay, right. Now there's a tricky part of the definition in which I will give you the honest, my honest response to it. Cram this last sentence. This one here. The first part, yes, please learn that in depth because that gives you a very important understanding when it comes to the accordance of accounting, like the basis of accounting. But this second part that says, other than those relating to contributions from holders of equity claims, all right? There is never a time when you're getting assessed where it's going to be a key point that is going to be worth marks. You just need to ensure that when you write your definition, you include it in your definition. Okay? Contributions from holders of equity claims would essentially be like dividends that we may owe to people, preference shares, share issue costs. All right, those are other equity claims that need to be paid for and accounted for. Right, so those would not be included in income. Okay, essentially it's a complicated definition to explain, so I hope that makes sense, that there are other items that would not affect the income because they are holders of equity claims, meaning people that we owe money. They may have a share in our company, we owe them dividends. Okay, for us to issue these shares, there are share issue costs. We have to account as those, right? So if we're getting any profits within those transactions, it will not affect our income. Okay. Expenses, same as income, but the opposite. There's a decrease in our assets or there's an increase in our liabilities that results in decreases in equity. Okay. Other than those relating to distributions to holders of equity claims. Okay. Right. Now we're going to go, let me go back to this part. I'm going to hence give you a minute or so to compute what this little passage is trying to show you. Okay? Please try your best to understand it. These are some elements that you will be dealing with. So this is like a guideline to show you how you would debit and credit such elements when you are questioned. So I'm going to give you a minute to analyze.